All right. Okay, how is everybody doing today? The US market is open and for the past hour or so, and you are here with me, Andrew Hahn. You can reach me at andrew@tradewithufos.com. Today's September the 29th, and you are with us at FX Street, the Nailing FX US session. And as you see here, there's free membership to our website. We've got a number of resources available, and of course, you can get more information about our schedule as this little video kind of went through. And feel free to email me with any questions that we may have as a result of this session. Let's go through a few disclaimers. If you could just read through that as it's scrolling through there. Okay, all right. So let's see what's going on here. But just before I get into the markets, if this is your first time to this session or attending the sessions that we have here, yeah, maybe we could just type in the chat box that if you've been here before or if this is the first time. Just want to get a sense of where people are at. Okay, everybody's a little shy today. That's all right. Okay, so well, let's just dive into things. Let's dive into things and let's just see what is going on with the news coming up. All right, let's see here. So, the key thing this week, I mean, today and tomorrow, it's kind of the end of the quarter, and we, of course, have non-farm payrolls coming up on Friday here, right? So we're going to get, just some window dressing, in the actual equity markets, and that could keep things stable for a little bit. How is that going to affect the currency markets? Well, depending on how the flows are going to be in and out of the US market, if the Europeans are going to want to put more money in, then of course we're going to see probably some demand on the euro side. If they're going to flow money out, then change their stuff back into from euros into dollars, or dollars into euro, then we'll see some potentially some impact there. But it's kind of the end of the quarter, so many things can kind of happen. We've also got the US elections coming up, so of course that's going to have some impacts on the overall markets, and especially the sentiment. The Federal Reserve and the powers that be don't really want to rock the market, right? So they're going to probably keep a low profile, and we may see that kind of happening over the next month or so as all the debates occur and all the rhetoric comes out, and of course the American people are going to be at center stage in that sort of sense, right? And so the this is not our election, right? This is unless you're an American, this is your election, and of course people will vote accordingly, right? But at the end of the day, we don't have any say, but we do feel the impacts, right? And so do we care about what goes on over there? Yes, we do. But we also need to kind of understand what's going on in the market and how it's structured, and how things are kind of moving around, right? So when we come to look at the markets themselves, if there's anything that we really want to look at, it's probably going to be the the majors. It's probably a good place to start. And so here we kind of see what's been going on in the Aussie, just looking at the big picture perspective, right? If we just look at the big picture perspective here, what we're seeing is we had this nice little uptrend which was clearly broken, right? And so we now have a move down to some prior support areas, right? So if we kind of take this line here and draw it back, there's kind of prior support, so prior highs, right, which were broken by the up move, and now we had the test of that area, and so that's why we're getting this little bounce here. Now we have this prior low here, which can also be a line in the sand for potentially where prices could rebound up to. Now, when we at Trade with UFOs, one of the things that we like to do is on these higher time frames, especially if you depending what sort of trader you are, right? You may have a different style. And so, commonly how we define the, looking at these common time frames such as a daily would be more type of a, swing sort of style. And so we get the big picture, we understand what's going on, in terms of the market's structure, the climate, the environment by looking at these big picture, higher time frames. And what we tend to do is look at the kind of throw on auto climate. It's one of our tools that are out there. And what we do and what auto climate does is it just helps us understand, do we want to be buyers or sellers? It answers that question, right? Do we, with the current market environment, what is our bias going to be, right? And so if we are looking for a bias to the downside, we would tend to look for these red climate indicator. If we're looking to buy, it would be this sapphire blue color, right? And you probably notice that there's a little bit of difference between, say, this red dot here and this red dot here. So the smaller red dot means that the climate was not confirmed. So yes, there was some sort of downward movement in price, but it was not confirmed, right? And so what that tells us is hey, do nothing in the market, right? Do nothing for this particular market, the Aussie dollar. Okay, it's not until you have a confirmed market. So this would be a blue sapphire up climate, right? And because it's a solid dot, like a thick dot, and that would be confirmed up climate, and we have confirmed up climates all the way until here where we have a confirmed down climate. So that's where we would want to look for shorting opportunities. So that's just a quick overview of how we use climate and also how we use some of these higher time frames. And once we determine what sort of bias we want to have, then we look for opportunities on, in this case on the sell side, right? So the technology that or the app that we use there, if you're new to Trade with UFOs, is what we call auto UFOs. So what this app does is it helps us identify locations where, it'd be a good place to get into a short position, so to sell, right? Sell the Aussie dollar. Now we don't look at the auto UFOs on the daily time frame here because we want to get an understanding of where there is a good entry point, right? Then we tend to go down to our lower time frame. So we could, in this case, go down to a 1 hour time frame, and what the app does is it calculates where those opportunities are on the 1 hour time frame. So yes, there was a set of UFOs on that daily time frame identified here, where I kind of highlighted that whole area, right? And if we refine that a little bit, we can see that there are actually two sort of areas here which would be of interest, but I'll just kind of leave that whole area encompassed there. And then lower down, we also have another couple of areas um, where we have some concentrations essentially of unfilled sell orders, right? So there are two type of orders that are going to be placed in the market, right? You're only going to be placing a buy order, right, which commonly would be a limit order, right, unless of course you are just hitting the bid or hitting the ask, in which case that'd just be a market order, right? There's no there's still a buy or a sell order, but it's just give me anything, right? Any price that's out there. But what commonly we do is put a bracketed order in, right? So we have our entry, our stop, and our target, right? So three essentially, two limit orders and one stop market order or stop loss, right? And so what we do on this lower time frame is I help the Auto UFOs app helps us to identify where those concentrations, we believe those concentrations of sell orders are in this case, because we are wanting to be sellers, right? And so that's what the red UFOs are. They're where we believe the concentrations are of sell orders by the various market players, whether they be, the institutions or the retail traders, right, or commonly all lumped together. That's where we believe those concentrations of orders are. So the green ones mean that these are where the concentration of buy orders are, and so so here we have a couple of concentration levels here, and so we expect the buyers, those orders to trigger as price comes into these areas and kind of push price higher, right? And so that's in a nutshell what the Auto UFOs do. And once we have kind of highlighted those areas where we are also interested in potentially in this case selling, the green ones kind of become our targets, and so this is very helpful, when you're doing your preparation for your trades, because very quickly and consistently, you're able to identify these areas of potential buying and selling, and use it as a way to layer, or complement even some of your existing strategies, which I'm sure you all have, right? So commonly out there, as we kind of mentioned before, there's a prior low here, and that whole concept of support when broken becomes prior becomes resistance, and so there are various schools of thought of price returning to that area to be tested. Of course, if there's a continuation, price can just keep on moving lower. Price doesn't have to go back and retest that area, but it's an area that people have as part of their analysis is of interest, right? And so we can take in that as information, as a what we would define at Trade with UFOs at Trade with UFOs as a indirect force or piece of information that leads to, or that is incorporated into the decision making of traders, of of algorithms and so forth, right? And that could be one of the indirect forces that you would use as part of your decision-making process, or it could be some of these Fibonacci tools, right? So you may use a set of the standard Fibonacci tool numbers, right, to help you make a decision about where what's a good location, right, to maybe to go short, or to go long, and you would take that piece, that Fibonacci tool, right? And commonly you would try to understand the retracement, from this high to this low, and where can it come back to, right? So this being a 38% retracement here, maybe some of you have initiated already some sort of short, right? Because it lined up here. Now for those of us at at Trade with UFOs who have the app, right? Those who are our subscribers would actually be interested more at this higher area if they were also using Fibonacci's, right? Because that is a 50% retracement area, and so that's exactly what the Trade with UFOs app did for us, was actually identify that area, right? And hey, it just so happens that it lines up with a 50% retracement. There's another one up here that aligns with the 61.8% retracement. And then the other one up here, which aligns with the 76 percent retracement. So so this helps filter out, right, those areas that we are probably not going to be interested in, right? And hey, look, if price does reach here and then it turns lower and it never gets up to these areas, well, hey, look, yes, I missed an opportunity, but that's what it is. Okay, it's no different to any other decision making strategy or indicator or study or tool that you may use as part of your overall decision making process, right? When it comes to trading, so in a nutshell, that's our our two sort of piece of technology that we use and that we talk about in these sessions here, and also on our YouTube channel, Trade with UFOs. So again, if you're interested in understanding more about what we do at Trade with UFOs, there was that website that our website here, Trade with UFOs, and if you click on kind of put my name there, then it'll take you to this page, right? And you can just put your name and email address. Tell us you're not a robot, which I think none of you kind of look like you are, and just click for next steps. Okay, so all right. So that's for those of you who are new here. You've never been to one of our sessions. This is what we're on about. This is the technology that we use, and you're most welcome to find out more about it. Okay. All right. Cool. So if there are any questions, feel free to just type those into the chat box. All right. Okay. So that's the Aussie dollar. So as we kind of talked about, right? We've got the some window dressing on the equity markets. We also have non-farm payrolls coming up on Friday, and so we may find that the next tomorrow may be a little slow just because of window dressing. Thursday, well, we also have ADP numbers coming out on Thursday, so that may give us some some movement as a result of that early indication of what payrolls may be expected to be like, what's been going on there. But then the real sort of impact numbers come out on Friday with the non-farms. And again, what's really going to be happening here? I mean, we've got the US, as I was saying before, we've got the US elections coming up. And so, is that going to, put a bit of a damper on any sort of moves, for this month's non-farm payrolls? Well, we'll see. But at the end of the day, what moves the market is people putting their orders, expressing their opinions, right? They're going to put their orders into the market to either buy or sell, right? And so this is where this whole idea of these direct forces and indirect forces kind of come into play, because what we're trying to identify are those orders, those concentration of orders, which are going to be triggered, get filled, and therefore um, you know print on this chart and tell us, well, is there going to be a continuation of the move in a certain direction to the upside, or is it going to move down to the downside, or is it just going to move sideways, right? I mean, that's all influenced only by those orders that are unfilled, and so that's what we are attempting to identify using the Order UFOs app. Okay, so the Aussie dollar looks like we still have some potential for how you are going to enter and exit this markets, right? So let me just repurpose this line here, right? So if you are looking to go short, as we want to be, right? Then hey, look, based on the Order UFOs, which we identified earlier, there are 3 areas where we could be interested to go short. Well, you've basically got identified, 3 opportunities, right, to go short. And so then it's really up to you to determine, okay, as part of your trading plan, are you allowed to go short, how many times, right? And how many times can you go wrong, but at least you're able to identify the risk, right, associated with these 3 trades. You know that you could put your stop above these areas of where we believe there are concentrations of unfilled orders, and so this way you're able to make some sort of trading decision according to your own plans and manage your risk and so forth, right? And then how much are you going to risk on each of these trades, right? It's going to be a consistent, for example, $100 a trade, and therefore, because there's potentially 3 trades that you could get stopped out here, right? So you're risking $300. Is that part of your plan or not? So the Aussie dollar, that's kind of what we're seeing here. I'd say something similar on the New Zealand dollar, being commodity currencies. And so here we've had some movement again to the upside, but they're all kind of pausing. This one has challenged the prior high. So if we're going to have any sort of move up to the upside, right, then we need to make those continued higher highs, right, and higher lows. So very much it's possible, right, that we could get New Zealand dollar a move like this, right, kind of like this, and we have, even though we've had a downward move, is this possible, right? Or if you kind of see this as a pennant, right, one of those continuation moves, or then would you hypothesize that it's going to do something like this, right? So there are various alternatives for the New Zealand dollar for this sort of pattern, similar to the Aussie dollar, right? It could also be in a similar sort of mode, but in this case you would have probably identified this, take this one here, you probably identified this as some sort of pattern which was broken, right? It didn't go down to a continuation, right? But is it an argument that, hey, you could still get some sort of continuation here, right? Well, that's where how you define your rules, how you define the patterns that you look at, and maybe you use some technology, right, to help you identify these patterns, and factor them into your trading decisions, right? But this is definitely 2 scenarios, and it could also go sideways, right? As it did here for a while, kind of went sideways and then popped up, and now is it going to continue up, or is it going to pull back and then head down? we'll see, right? But definitely we're getting some sort of retracement, right? We've got an impulse move here. We're getting a retracement move. Similar that we're going to see on the euro, so some prior support or resistance kind of coming in. I'm going to remove this so we don't get too distracted. Okay, so we can focus in on what we see in front of us, right? So again, clearly we've got the move downwards, but how far will this retracement go, right? How far will it go? So we can give ourselves some perspective here. Clearly we have gone past the 38, so that's it's not going to be a shallow retracement. It's reaching up to the 50%, but here we have 61.8% retracement, 76.8 here. Right, sorry, 78.6 here. And so again, how do you make your decision? Do you just use retracements? Do you use some other moving average? Maybe triple moving averages, double moving averages, what have you, right? And so we just flick on the auto UFOs here just so we can get our perspectives. Then again, we can just quickly see that we have 1 here, 2 here, and 3 here areas, okay, where we've just come into some sell orders, right, on the euro dollar. So if I just flick this off, okay, and again, where are the ones I'm interested in? Probably these two right here. And hey, look, if we get a super deep retracement, right, if we get maybe some non-farm payrolls number, right, which, hey, if it's good, well, will that mean higher interest rates or lower interest rates? What will the Fed do? Who knows, right? But what we do know that is here, if we see a move, right, a continued move up until Friday, right, through these two areas, right, of where sell orders are, right, then hey, well, we get, if we decided to trade these areas, right, then we'd have to be willing to lose, twice, right, and then our final line in the sand is going to be here, right? But if it goes all the way here, right, then what does that do with this climate, right? And so again, that's where on the daily we would be monitoring, okay? We would be monitoring what has been going on, right, with the climate, right? And the question is going to be, well, if price is going to move all the way back up here, what impact does that have on the climate, right? Is it going to go neutral or is it going to go blue? If it's going to go neutral, right, then, okay, maybe we have to reconsider some of the orders that we're placing into the market. If it goes blue, right, then yeah, maybe our short trades, we may have to, try to obtain a little bit more comfort, right, about whether, price is behaving in a way consistent with a short trade, right? And so one of the ways you can do that, again, using the Auto UFOs tool, right, is because it had helped us identify, right, these areas to go short at, right? What we would want to see, from just a pure price action point of view, would be, probably at the, some sort of lower time frame, we'd want to see, not this sort of action, right, where you get on those lower time frames higher highs and higher lows, right? We wouldn't want to see that. What we would want to see would be, a high put in and then some lower highs and lower lows put in, right? And even better, right? Even better is if what's going on at these lower time frames, right, is or time intervals is that we are even forming, right, the areas of concentration, right, of sell orders, right? So what we would want to see would be, as price moved down here, you know, we'd want to see areas where there are new sell orders, right, that were there, right, and that are waiting to be triggered, you know, so that when price does come up to these areas, right, we now don't have to be concerned, right, that price is going to hit our stop anymore, right? You know, we don't have to be concerned about that. You know, our original stop would have been up here, right? We don't have to be concerned, right, as much, okay, of getting stopped out, because we've got these areas, right, of concentrations of unfilled orders that need to be absorbed, right? The buy orders need to be matched with the sell orders, and if you have an overwhelming number of sell orders at these areas, right, you know, as they're forming on the way down, then you know that, and you know that, look, there's a bias anyway to short the euro, then you would you know, feel a little bit more comfortable that these unfilled orders are being placed into the market, right, as price moves lower and lower and lower, right, and that they would have to be filled if price were to get anywhere up here, right. These orders would need to be filled, but as long as there are, you know, a greater number of you know, unfilled orders versus, you know, that's greater, right? And actually, let me use a different color. Otherwise, you can't really see, right? I'll just move it over here. So if we have, maybe I'll type it out. That'd be better. Okay, if we have sell orders, okay, greater than the buy orders, right? Those, spell it out. Right, is greater than the buy UFOs. Okay, then you know, this will assist in preventing price from reaching higher prices until the sell unfilled orders are filled. Okay, so we're not going to you know, see this stop get triggered unless price, you know, is able to, there's enough buy orders to absorb all of these sell orders, right? And so that's what needs to happen, right? But we can, again, you know, we can gain some comfort if we start to see more sell unfilled orders getting put into the market there, and therefore, and you know, keep price moving lower and lower and lower, right? Which is really what we want to see. Okay, so that's how we can you know, kind of look at these, kind of use the technology, right, to help us make you know, a smarter decision, you know, around around what we're seeing in the markets here. Okay, so okay, I'll take that away now. Okay, so this is kind of the bigger picture of things. You know, we've had a strong move to the downside. This is just a retracement move. You know, is it going to be, you know, obviously it's not going to be a shallow one. It's going to be a kind of medium to kind of normal sort of retracement, I guess, to a 61.8. but is it going to go all the way back up to 118.5? Well, we'll see. We'll see. Okay, but for the moment, downward pressure, the same on pound as well. So so kind of seeing similar type of price action amongst the majors, which is to be expected. With that strong dollar, right? But now we're seeing a bit of a pause in the dollar. So here, Canadian has been pretty strong, and the question is, where is it going to stop, right? So if again we go down to that hourly time frame, and we kind of flick on the UFOs. So where are some of those areas of interest, right? Where something could come into the market. So clearly here, okay, just move this area here. Then we also, let's do another one. I'll put this, it's a double layer about here. Okay, and I mean, these are all calculated, right? By the app, on a consistent basis, and so you can be pretty confident that it's going to calculate the same. It just depends on your data feed. Because there are differences, especially in Forex, there are differences between, the Forex.com data feed and the Oanda data feed and whoever else is you're using for currency, right? Their data feed is going to be different, but the calculation will always be, should always be the same, right? Okay, so dollar CAD, a little bit of a bounce up there. And then what else? We got the dollar yen. Let's turn these off for a second here. Okay, so some prior areas of interest, right, come into play, back down here. So again, your support and resistance sort of plays. Okay. So this is, let's go back to the daily. So again, so we can gain some perspective here. So we are downtrend or sideways trend. What's the deal here, right? So we have, definitely if we're looking at it from this perspective, right? We've put that lower low in here, and if I clone this. All right, we had that downward channel, which is being violated now. So there's definitely a pause in the market, and if we just want to get a sense of the bigger picture, where the concentrations of UFOs are potentially going to be, well, we're kind of sitting on something right here, just underneath it. We want to get a little bit more, details of potentially where those areas are, then that would really push us back to this area, right? That that prices challenged before and rolled over from since then. And so we got to get again some sort of move up here, to the upside. I guess we'll need to see, or are we just going to roll over from here back to the downside? Yeah, that's the question, right? That's what's going to pay our bills, isn't it? So we're going to put some dollars in our pocket. That's the yen there. Let me just jump back to the daily, and so again, we're just looking at the majors because of the non-farms kind of coming up, right? So there's probably a lot of interest in the US dollar. So the dollar Swiss, so we've had some Swiss strength. It's coming back to retest the prior highs here, so it's kind of bounced off already. But yeah, what's the, let me just get rid of these here. What's the climate? I believe the climate was up. And so, you know, we still have a upward bias on pound Swiss, sorry, dollar Swiss. Okay, and if we wanted to get a sense of, well, okay, well, is there something under here, you know, that could help, or already something has it has responded, right? But yeah, what's the going to be the nature of it, you know? So I would say here, and if we turn on the UFOs, okay, so it looks like there's some opportunity that's going to take us to this lower area. We still have here as a barrier. This, right? So this is what is, you know, kind of keeping dollar Swiss at bay. This can easily, you know, Swiss can easily strengthen and move lower, depending on what happens on the equity market side. Right? Okay, let me just pause here. Is there anybody got any questions about, you know, some of the things I've talked about today? You know, about non-FARs, about, you know, window dressing. Are they sort of new terms for you guys? Any questions about the app at all? Yeah, just feel free to, you know, to type in the chat there if you've got any questions. So if not, then let's just look at let's see, dollar Sing here. Again, some areas of buying here, some areas of selling here. And so again, you know, to trade any of these levels, you gotta have to either wait for, you know, since this would more than likely be an up climate, we want to have a bias to buying. So we'd have to wait until price came back down to you know, 136.40, right, before we're able to initiate a position, right? So but you can still prepare for it. Okay? You can still prepare for it. But that's kind of all that we have here, right, at the moment. Just kind of pull things back. Yeah. So it's a very sort of you know, consistent moves down to the downside. And is this going to be a change in overall climate to move price back to the upside? I guess is what we will need to see. Okay, but so just to, I think, just to summarize, right? You know, we may see some continued weakness in the dollar up until the end of the week when non-farm payrolls come out. But then there's also, you know, given that it's the end of the quarter, there may be some window dressing done, and there's also, you know, the normal sort of monthly, you know, salary payouts, especially on the pension side, and so money may be going back into the markets or treasuries based on some decision that the portfolio managers have determined to do for the banks or the hedge funds or what have you, right? And so we're kind of in the middle of nowhere here at the moment. But I guess you just got to make sure you just measure your risk, you know, understand what your dollar risk is going to be, and then just trade according to your plan. You know, I mean, that's the best thing. Trade according to your plan. Take into effect or, you know, the various things that you need to consider, right, when you're making your own trading decisions. But definitely, you know, you got to try to use technology as much as you can to make your decisions objective, whether it's automating, you know, stuff like moving averages or some other decision-making tool. And of course, there's the auto climate auto UFOs, which is available to you. Now, if you are interested in any of these apps, like I mentioned, there is the sign up here, and we do have actually auto climate as a tool, which is kind of useful, regardless of your time frames as well. So both of the auto UFOs and auto climate are pretty useful to kind of help you make your trading decisions. So so do kind of look into that and do a bit of research into them yourself. All right, well, hey, look, if there are no other questions, then what I'm going to do is I'll just add here, we've kind of gone through the majors and yeah, kind of identified those areas where we can initiate buying or selling, and kind of understand the context currently under at play. And so just follow your plan and just trade safe, going into Friday. All right. So I'll leave things there. Thanks for joining me on this Tuesday, the 29th of September. Do keep safe, and we will catch you next time. Okay. Thanks very much. Take care.